When purchasing a vehicle today with your own savings, you're acting as your own financial institution. In essence, you're lending the money to yourself, and what it's costing you is not necessarily the interest that you'd earn at the bank, but rather the opportunity for those funds to be directed towards other areas of your financial architecture. There's a cash opportunity table that consumers should review before they go ahead and prepare a bank draft for their next vehicle purchase. Take a moment and see if there may be better opportunities for you. Many people may have outstanding balances on their credit cards or their department store accounts that may be carrying interest rates of 18% or higher. Some people still have loans or other household items like furniture or appliances that also may be carrying higher interest rates. If you're a homeowner or a landlord with a mortgage, you'll be surprised to discover how much interest you could save and how sooner you could pay off your mortgage by making a partial payment against the principal with your cash. Hop online and find a mortgage savings calculator tool like this one that you can use to see how much you could save. In this example, a homeowner has a $200,000 mortgage that they took out on their home 7 years ago over a 25-year amortization period with a current interest rate of 4.25%. Take $15,000 as a one-time payment against the principal and you can see what the impact will be. According to the calculations, you'll pay off your mortgage 28 months sooner and save over $15,000 in interest charges in the process. But remember, if you have other debts that are charging you higher interest rates, you'll save a lot more money if you pay off all your higher interest debt first and then redirect all of your previous high interest debt payments to paying off your mortgage. Many people have not fully contributed to either their own personal R.R.S.P or their spouse's. If you have room to contribute, you can top up an account which may trigger a tax refund on your next return. For example, if you made a $15,000 contribution to an R.R.S.P and had a marginal tax rate of 20%, you could get back $3,000 as a tax refund, which you can then use towards other opportunities or reinvest towards next year's contribution. In 2009, the Canadian government set up a tax-sheltered savings strategy for Canadian residents called TFSAs. You're allowed to contribute a maximum of $6,000 towards your personal tax-free savings account each year, which will allow those funds to grow with no tax payable on the growth of the account. Just with RSPs, your investment ceiling accumulates each year, so if you haven't reached your contribution limit for either yourself or a spouse, you can catch up with a lump sum investment. Yet another opportunity for you to consider is setting up or topping up a registered education savings plan for your children or even your grandchildren if you have any. The government provides a grant in the amount of 20% of an investment, and depending on your income level, you may be eligible for more. This is free money. Financial analysts recommend that you keep 3 to 6 months living expenses on hand as an emergency fund for life's unforeseen crises. Taking your savings and using them for a vehicle purchase may leave you short and exposed. Using your savings may also leave you short should an investment or business opportunity come your way. Many people see investing in home renovations to increase the resale value and enjoyment of their home as a better strategy as opposed to investing their cash in the driveway. Perhaps you have a dream vacation that you've been postponing, and this may be a terrific opportunity for you to realize it. Or your cash may represent an opportunity for a family gesture long overdue. If you've identified with any of these opportunities, paying cash from your savings for your vehicle purchase may not be in your best interest. Most people in this situation should speak with a financial advisor, bank manager, a trusted friend, or a family member to see how your cash may be better utilized. To give yourself such an opportunity, financial experts recommend that you take advantage of dealer plan loans that are available through a dealership's financial services office. These loans are completely open agreements offering both fixed and variable interest rates, with most of them set up with a Canadian chartered bank. Interest is only charged on the remaining monthly balance, and you can pay into them or pay them off at any time without penalties. The interest rates are lower than regular bank rates, and you can have your payments come out of your account any day of the month. This can be arranged with a financial advisor at your dealership with your convenience. Give yourself some time to investigate your cash opportunities. If you haven't found a better use for your cash and you can't sleep at night, you can pay off your vehicle loan because it's completely open, and the worst it would have cost you is a few months' interest, but you would have had the luxury of making a well-informed decision. Ask the financial services manager in the dealership how affordable a dealer plan loan can be for you, and put your cash from savings to better use.